Yo, what is good, guys? Welcome back for another video. And today I'm going to be explaining to you how you can use liquidity in your day trading, swing trading, scalping, because liquidity is something that is very, very important in trading. Liquidity is basically why the market moves, why you see those candles moves, or because of liquidity. And we are going to head to the chart and I'm going to explain it to the simplest form for you guys. If you guys like content like this, trading related content, do well to hit the like button, smash the subscribe button so you can become part of the community, and also so you will be seeing more videos from me. You can also join my free Telegram channel. The link will be in the description. I post some trades there. These trades all derived from liquidity setups. Like, they are always based on liquidity. That is always one of my major, if not the major, conflicts in my trading. Okay, let's talk. Let's open the chat.
This is GBPUSD, and if you can see, we are on the 15-minute time frame. I'm going to go up to 1 hour. Sorry, I've already marked out levels of liquidity, but before I start to explain it, first of all, what is liquidity? Now, I always love to use this illustration to explain it. This illustration simply goes: liquidity is fuel for the market. The same way a car needs fuel to run, the same way a generator needs fuel to start, the market needs liquidity to buy and sell. The market needs liquidity to go up or go down. And now it is our job to find those places where there's liquidity, so we can then have more confidence and a more probable bias. You guys, so liquidity basically gives you more, like, it makes you more right with your bias. What do I mean? A lot of people have the right idea, they have the right POI, they know how to use order block and all this and all that, but most of your order blocks get disrespected. What if the market wasn't actually bearish that day, but it was bullish? You didn't know. Instead, you wanted to sell, you hit your stop loss. Now you're thinking order blocks don't work. Instead, you don't know how to use it with a correct bias. What do I mean correct bias? You don't even check your time frames well. You don't go up to higher time frame to check the whole bias for the day. It's one thing to just say, okay, let me go to daily time frame. I'm just talking. It's one thing to just say, okay, market is just going up, and then there's another thing to say, okay, look at this example here. Market left the low, market swept that low, a liquidity sweep is going up. Now you know, okay, we are bullish till market takes the high, and you can see what happened here. Market just passed through this high a little bit, now it's going down. Now, if you're smart enough, I won't even need to say this, but if you look what happened here, market took the down, went to the up. What do you expect? For it to take the down again, either it take this one, go up, or it comes all the way to take this deep structural liquidity. Structural liquidity are simply highs and lows where liquidity is resting. Do you understand what I'm saying? So this liquidity here, it gives you more confidence in your bias. If I enter the market now, maybe on this day, foot match, I'll just enter my daily time frame. See, we have swept liquidity, we are still going up, and remember, this is the next draw of liquidity. But when I say draw on liquidity, it is where market is targeting next, the next major high where liquidity is resting. I'll still be bullish. You get, I'll just wait for a nice entry, target my draw on liquidity. Now market is going down. Like I said, this is the next draw on liquidity. It can keep going all the way, sweep out this draw, sweep out the draw, these lows. You understand what I'm saying? Simply know how to work with liquidity. When you enter the market, the first thing you're looking at, what is the next draw on liquidity? Try to trade in that direction. Simple as that. Find the next draw on liquidity. Let that be your bias for that day. Let that be where you're aiming at. This video is not talking about entry models. If not, I would have explained how to enter trades. No, I'm talking about liquidity. So now let me go to that 1 hour. It was actually a very nice example. If you can see what happened here, there were so many highs. But listen to these people, you might not hear this everywhere, but when there are several highs close to each other like this, just know that when price takes out the first high, price is like most likely going to take the next highs close to it. And if you can see, market took out this high, what happened? It took this one, took this one, took this one, went down immediately. You can see it just went up there. A lot of people would think it's a breakout, they want to start buying. People that saw this one, okay, some people that made profits, gone. Some people that were holding maybe to this level, what happened? Their stop losses have been hit. Why? They cannot wait for confirmation. When market takes out liquidity, it moves the opposite direction. Exactly what happened. Took out the liquidity, went down. People that thought this was a breakout, stop loss hits. And you that knows how to trade liquidity, you will benefit from this. Imagine you come, you see market here. A lot of people will say maybe this is a pullback market, to maybe come here, bounce off here, buy. You know this is a liquidity sweep. You take your sell, you make your profits. Like I said, this video I'm not explaining how you enter, I'm explaining liquidity. If you want me to talk like how you enter the trades, leave it in the comment. I'll surely do a video for entry models after seeing a liquidity sweep. You understand? Same thing happens on the downside. The liquidity sweep market might not just go the opposite way immediately. Sometimes it may take time, and you can see what happened here. It kept going down. At the end of the day, you can see it respected this week like a break and retest. Market tends to do this. Why? To trap some sellers or buyers. You can see people here, they will be trapped, expecting maybe price to come to this low as TP. What happens? Price goes back, hits their stop losses or their break evens, goes to the upside. This is a liquidity sweep. You need to be trading with that liquidity mindset. You understand what I'm saying? That is the best thing you can do for yourself. Enter the chart, be looking for where price has swept, where price is heading to next to sweep. That is like when price takes out the downside, which is sell side liquidity, it needs to go to the upside, which is buy side liquidity. Listen to me when I say it needs to. That is how the market moves. This one is not me saying this is how a car needs fuel to run. The market needs liquidity to move. So when it takes from down, it takes from up, it takes from down, it takes from up. Just what you need to do, find where it takes from, wait for confirmation, take a trade in that direction to the next draw on liquidity, the next target. If it's buy side, if it's sell side, just know that alone is giving you a head start from so many other traders that don't know how to use liquidity in their trading. Liquidity is the most important thing, because a car is useless if there is no fuel. A generator is useless if there is no fuel. This market is useless if there is no liquidity. If there is nobody trading, the market will not be moving. That's why you see holidays, Christmas, the market will stop moving because everybody have gone on holiday. There is no liquidity. But when there is liquidity, the market is moving. That is why liquidity is the most important thing. Let that be the center of your trading. You understand what I'm saying? This thing is going to improve your trading so much. And why I love liquidity, you can put it in every single thing, be it trend lines, be it Fibonacci. All you need to do is come. Okay, market has taken out upside, buy side liquidity. Find whatever you use, your POI, whatever, take your trade. You can see now the market has taken out liquidity. This is a breakout. You find a retest on lower time frame, you sell. Simple as that. It will be easier when you get your bias right, when you get the direction right. So I hope this video has helped you, and I know it has helped a lot of people. If you watch it this far, do well to like the video, subscribe to the channel. I really appreciate that. I'm trying to grow, head to 300 subs, head to 400, 500, all the way to 1k. If you want to be seeing trades I drop, join my telegram channel. The link will be in the description, and I will see you guys in the next video. Love.